Hello and welcome to this video on absolute and relative poverty. So in this video we're going to look at the difference between absolute and relative poverty. This is how we talk about poverty in economics, and also look at how we might go about measuring poverty levels. So let's start off with what do we mean by poverty. Obviously by poverty we can think about the term being poor. But when we think more closely about poverty, do we mean poor in the absolute sense, you are just poor full stop, or do we mean poor in comparison to everybody else who lives in your society? This gets us onto the concept of absolute poverty and relative poverty. So let's start off with absolute poverty. Absolute poverty is what we might more traditionally consider as poverty. And it's when you are so poor that your daily existence is threatened because you don't have the resources, or you can't afford the resources to meet your basic needs. The general consensus for this, and it's a World Bank guideline, is that people who live off less than $1 a day, measured at 2005 GDP using purchasing power parity, are considered to be in poverty. Some economists argue that the poverty line should be drawn at $2 a day, but general consensus, if you earn less than $1.90 a day, you are in absolute poverty. So let's have a look at how this has changed over time. This chart here shows us the number of people alive in the world from 1 billion in 1820 up till the 7 billion figure more recently. And then we have the number of people living in extreme poverty, and the number of people living below that $1.90 a day, adjusted for inflation over time. We can see back in 1800s, the majority of people in the world were living in poverty. After about 1970, we see the number of people in absolute poverty starting to decline, whilst the number who live not in extreme poverty, not in absolute poverty, grows. When we look at the reduction of extreme poverty in some particular countries in particular, we can see that countries such as the USA, Australia, New Zealand, Canada, and Italy achieved very quick rates of reduction in poverty as their economies grew. If we look more recently, this shows us the percentage of people within a country who live on below $1.90 a day. So if we start off with the kind of light yellow countries, we can see that in these countries not many people live on less than $1.90 a day. So we're talking about Europe, North America, most of South America, Russia, and even China. Very few people here living in absolute poverty. By the time we move up to the kind of red colours, then we're talking about quite a large population, over half the population living in absolute poverty. So we see here Sub-Saharan Africa, Central Africa in particular, have the highest levels of extreme poverty. Maybe India, you would notice another country that has significant poverty levels. Now let's move on to this concept of relative poverty. Relative poverty is when people are living below a certain income threshold in a particular country. So we say you're poor relative to the country that you live in. So for example, in the EU and the UK, relative poverty is said to apply to those people who live on below 60% of the average income. And here we're using the median average, i.e. the income, the middle income of the population. This measure is slightly subjective. Are these people really living in poverty? Are they really poor? If everyone gets richer, but some people get much richer, then that's going to perhaps skew our figures. Relative poverty arises from inequality in wealth and in incomes, and we might be concerned about this, economists, not because we feel that their basic survival is threatened, but maybe to do with issues of fairness and whether an unequal distribution of income is desirable. So let's have a look at how we measure relative poverty. And don't worry, if this image here is slightly blurry, you haven't been drinking. It's just a slightly blurry image, so I apologize for that. Okay, here we have the distribution of income throughout the population. So on the bottom here, we have how income, essentially. So how much income you earn per week. So you earn 0 per week up until 1,000, and this is in tens of pounds per week. So £10,000 per week at this end, nothing at this end. And then on this axis, we have the number of people that applies to. So from 0 to 1.6 million. So for example, at this very rich end here, the number of people who earn up £10,000 per week is just under 200,000 people. So effectively, we've got everyone in the country ranked from the poorest down at this end, and we can see how many of them there are, all the way up to the wealthiest at this end. We can see how many of them they are. Now, the median income, which is important for relative poverty, is the income that comes in the middle here. So if we have 50% of the population to the left and 50% of the population to the right at this point here. So the median income here is telling us it's £473 per week. So let's draw a line down at this point. So this is the median income here, £473 per week. Now to find out those in relative poverty, we take 60% of that figure. And 60% of that figure is £284 per week. So let's draw a line up from £284 per week. And we would say that if you learn less than that, then you are in relative poverty. You are earning less than 60% of the median income. So if we were to count all the people down here, all these people who are earning less than 60% of the median income, and work out how many that people is as a percentage of the population, then that is the number that we would say is the number of people living in relative poverty in the UK. So when we actually look at the figures, how many or what percentage of the population is that? Well, in the UK, it is fairly stable at around 20–25% of the population. If we were to have a look at how this compares across Europe, we can see that the UK is broadly in line. Down this end, we have a smaller percentage of the population who have less than 60% of the median income. This tells us that there is a slightly more equal distribution of income in these countries. So Czech Republic, Slovakia, Netherlands, Slovenia. At the far end, on the right-hand side, here we have higher levels of relative poverty. So, for example, Greece, Lithuania, Bulgaria, Romania, Latvia. This tells us that there is a slightly more unequal distribution of income in those societies. Two particular areas to be aware of when we talk about poverty is obviously we're talking about the number of people, but who are these people who are generally more often affected? We often talk about pensioner poverty, particularly those people who have retired and lost their jobs. If their pensions aren't of a sufficient amount, then these people can suffer large amounts of poverty. Another group that often is a victim of poverty is children born into households with low incomes, and there's a lot of correlation between the negative effect or the negative outcomes of a child's upbringing and the level of poverty into which they're born. More generally, what are problems with poverty? Well, as we know, markets work well when we have things like the rationing mechanism, the signaling mechanism. In some respects, spending money is like voting. When you spend money, you're saying, I want more of this. When you don't spend money, I'm saying less of this. Now, if we have poverty, actually you can't really take part in that system. You haven't got any money to spend. You can't indicate to society your wants and needs. You can't fill your wants and needs. So perhaps markets break down and the market mechanism doesn't work very well when we have very poor people. A second point here, poverty threatens the social cohesion of a country. There is potentially the risk of civil unrest as those without any money, any resources, question whether this is fair and maybe try some sort of revolt or disrupt the country. Often poverty has been associated with becoming dependent on the welfare state. I need the state to survive. I can't really fend for myself. And also crime. There's a link between poverty and crime levels. Poverty damages incentives, so there's a loss of long-run potential output for the country. There is no incentive for economic growth. There's no drivers for economic growth here. We have low levels of consumption, perhaps, from certain members of society. It can do long-term damage to my educational attainment because I can't afford to go to university, or I can't afford to buy textbooks or school uniforms, and so therefore the economy misses out on potential skilled workers. Lastly, I just question whether in the 21st century, in a civilized society, is poverty ethical? So what might change the rates of absolute and relative poverty? Well, obviously the rate of economic growth and GDP per capita will be crucial in alleviating absolute poverty, but perhaps not relative poverty. Again, economic development, how developed the economy is. FDI, again, there's been lots of evidence to suggest that positive FDI flows can reduce absolute poverty. Policies that increase trade, again, can reduce absolute poverty. In terms of relative poverty, obviously, the government tax system will have a big effect. If it's a regressive tax system, then this may increase relative poverty, whereas if it's a progressive tax system, it might reduce relative poverty. And again, changes in asset prices. Rises in asset prices tend to reduce absolute poverty, but rises in asset prices tend to increase relative poverty as the asset-owning people in society see their wealth grow, whilst those who don't own assets but perhaps rent them see their wealth fall or incomes fall. So another way to look at this area of poverty and development is to consider something called the Brandt line. And this was introduced by the economist Willy Brandt in the 70s to illustrate rich and poor countries of the world. So generally the most economically developed countries are the middle income countries in the northern hemisphere, and the lower income countries, the developing countries in the southern hemisphere. There are of course exceptions such as Australia and New Zealand. And the Brandt line is an imaginary division that's provided a rough way of dividing all of the countries in the world to the rich north and the poor south. So here would be an example. We can see a line that goes broadly through above Mexico and then across around the Caribbean. It just quickly loops in South Africa before going across the north of Africa, round Asia, and then looping in again to include Australia and New Zealand. So what we have here is the rich north in the blue and generally speaking the poorer south in the red. Another example here with a little bit less looping for South Africa makes quite a nice comparison here where we have the rich north and the poor south, and we'd expect to see greater levels of absolute poverty in the poor south and less developed economies. Finally, some other ways in which we might measure development: the Human Development Index, the Inequality Adjusted Human Development Index, which is where we remove the impact of the distribution of it, or includes, the impact of the distribution of income, whereas the human development is just GNI per capita. Here we make an adjustment looking at the distribution of income as well to get perhaps a better picture of the HDI. And then the multidimensional poverty index, which takes into account a range of different factors to assess levels of poverty within a country. So in this video, we've looked at poverty, the two different types, absolute and relative, and how we might go about measuring them. And we've also finished off by talking about measures of development. That's it. Thanks very much for listening.